Back with the market right here on ET now. It's turning out to be a bit of a disappointment. Not that it was a big bang start any which way for the market. A very sober, somber one, but that also has gotten cooled off into. So it's Hindalco which is down, there's SAIL which is down, Motherson Sumi, Biocon as well as BPCL are all the names which are adding pressure to the markets. It's IT which is holding out just very smartly though. So starting off with Wipro which is sitting at a 0.6% gain. You've got TCS holding up 1%, HCL Technologies and TechM both up 2%. And then there are of course some of the other blue chips which are supporting the market and a tug of war really playing out. ITC is holding up a good 1% as we speak, and HDFC too is providing support to the market right now. But Escorts has laid out an ambitious target which it is explained to various analysts, and Vivek, my colleague, joins in to explain the plans in detail. Vivek, tell us what is their big vision for 2020?
Well, that's right. What Escorts has actually done is they've met a lot of brokerages over the past couple of months. What most of the brokerages, the takeaway is that Escorts has set out a very ambitious target as far as 2022 and 2020 is concerned. Now, what they're saying is that most of the brokerages are actually quite bullish on the fact that not only is the tractor division of the company doing well, the company's non-tractor plans too is something that is aiding to the sentiment. Of course, if you're talking about the tractors segment, remember Mahindra & Mahindra, despite a weak Q3, was actually able to go ahead and up its guidance for FY18, given the fact that this was the kind of buoyant demand that they were seeing in the tractor segment. If you're talking about some of the key triggers, the most important trigger as far as Escorts is concerned is the fact that there's been a significant push as far as the budget is concerned. So it's been a rural focused budget. Remember the fact that the government has actually set the minimum support price at 1.5 times for most of the kharif crops. Now this actually leads to more buying power in terms of the rural sentiment, and of course this is something that Escorts can very easily expect to gain out of. Now if you're talking about the key financial metrics and something that the company in terms of returning shareholder wealth, just have a look at it. In FY 2012, the company had a market cap of close to 840 crore rupees. It has gone more than 10 times since then. And if you're looking at yesterday's close, the market cap of the company was a little over 10,900 crore rupees. So clearly, if you're looking at Escorts, it's been a multi-bagger. And if you talk about the way forward, the focus on the corporate governance, compliances and control is something that the company has clearly said. And also, if you're looking at it, the company has said that the market expansion and brand development is going to be very key for them. So it'll be interesting to see what the management has to say in terms of the future growth and targets.
Now, the management of Escorts joins us now. We'll take this conversation forward with Mr. Bharat Madan, Group CFO and Financial Controller. Bharat, good morning. Thank you for joining us. Now, you're aiming to be the second player in the tractor segment by 2022, which means you are looking at doubling your overall revenue. I mean, more than doubling. What is the plan to reach this target? Bharat, morning. Is my voice reaching you? Don't think I can hear him. I think we've lost his line there. Okay, never mind. We'll try and patch that line once again with the management of Escorts. Meanwhile, okay. Bharat, is my voice reaching you?
Yeah, I can hear you.
Hi, my colleague Vivek just outlined the Vision 2022 by Escorts. Now, on paper, it sounds not impossible, but it is very ambitious. The fact that you want to double your revenue in next 4-5 years now. So how do you plan to achieve that? Because the growth of the tractor market will only be limited. I mean, the tractor market will not grow at 20-25%. So how do you plan to double your turnover in less than 5 years?
Well, I think if you look at the Vision 2022 document, what we have made before the investors and analysts, I think it clearly gives a roadmap across various business verticals from where this growth is going to come from. So in the tractor business, typically we are looking at doubling our revenue, which also includes our focus on the export market, on spare part sale, on the new emerging businesses, which includes our implement business, which we really wanting to enter into. So I think all these put together are likely to give us the growth rate and obviously the ambition to grow on the market share front, which also we have laid down. So like you mentioned, so to be into the number 2 player in the industry, so which means reaching a level of about 15-16% sort of market share in the next 4-5 years. So I think that's something which we think is achievable. The company has been there in the past, so it's not something which will be a surprise to the investors or to the audience. So should be possible and doable.
Uh, what is your estimate for the growth for the tractor industry for next 2 or 3 years? Now that agri income is coming back, now that rural economy is picking up, how much will you benefit? How much will you gain purely because of your tractor business? And what is the plan in place to capitalize on your non-tractor business growth?
So we expect the tractor industry in the last 2 years it has grown almost 18%. So this year also we're looking at a growth rate of about 15 to 17%. Next year we expect the growth should continue, being an election year, and a lot of announcement we're seeing coming in the budget from the government side should help in pushing the agriculture sector slightly up. So that again can give about 7 to 8% growth next year. FY 2021 probably will see some sort of correction because the cyclical industry. A lot will depend on how the weather really prevails. So the rains are good, then probably see a good year going ahead. If not, then probably see some sort of correction happening. So long-term CAGR of industry will still be about 7 to 8% the tractor side.
Okay. You know, you rightly said, Mr. Madan, a large part of the country is still open to expansion for Escorts agri equipment as well. Tell us, how is it that you plan to scale up your market share here and the presence in these opportunity areas? Do you plan to take the discounting route to up your volumes and market share, or are you considering a more profitable or sustainable strategy? Highlight that for us.
No, I think the company's focus has always been on a profitable growth. So now will be really a discount strategy which company will go fast. We have seen it happening in the margin front, and we expect those margins will be maintained or even up from the current level, and we expect the margins to go further next year. So the focus will definitely remain on the profitable growth as far as company is concerned. From the sales front, the company has taken a lot of initiative, I think, which is really going to help us in terms of driving the growth. Probably the numbers will from this quarter onwards will start showing those seriousness what the company is really devoting to this area.
What about construction equipment? What's making you so upbeat here? And what, according to you, could be the factors that can help you turn it around from a 2% loss in FY17 to high single-digit margins and 3 times growth by FY22?
So construction, if you look at the growth, I think the division has been doing pretty well. This year also we're doing almost 30% volume growth. So for the first 9 months we delivered 30% plus, and the same growth trend is continuing in Q4 as well. So overall full year looks very promising. I think the India infra story is still intact. So like you said, from the government perspective, look at the areas where the focus has been laid down. Again, on the agriculture side or the infrastructure side or the railways. So all three verticals in which we are very strongly present today. So we think next 4 or 5 years should be really a golden period for this company, and we should be able to really take these growth levels to much higher numbers.
Are there any core business? Are there any non-core businesses which you're looking at monetizing? I mean, the idea really could be that get rid of those non-core businesses, focus on the core businesses. Your ROS and your return on equity automatically will expand.
There's not much really left now. I think it's the three businesses which we are in. They are all really the core businesses, and there are some small financial services business which we're in the process of divesting. They are very, very small in nature, so it's not really significant impact on us. So, but yes, like the idea was like construction was one of the pain points. So we have already divested our auto division last year, which was a loss-making unit. Construction, we had a plan to turn it around, and that has happened now this year, and we expect this to be in positive territory now going forward from next year. So as of now, I think on the balance sheet, we don't have really much really to the non-core side to really address.
Also, are there plans to list any of your other subsidiaries? Because I was going through your vision statement, there's no mention of that.
No, so there, like I said, there's no significant subsidiary as of now which we have. So there can be some strategic alliances which we'll do really going forward across all three business verticals, whether into the implement space or on the construction equipment space, or even looking at some inorganic options on the railway side. But they'll be all in the unlisted space if they are the strategic alliances, but they'll be part of the group for the Escorts entity. And so it'll be a single listed entity only for you.
Appreciate your time and glad you could join us. Meanwhile, we are almost trading at the lowest point.